Budget is over. Looks like Adani group of stocks are now settled. Is it back to basics now?
So, Nikunj, I think it's a little premature to say that Adani Saga is over. I think there are a lot of moving parts. What really happens to the MSCI and whether there is going to be a meaningful outflow, how the management deals with the current debt. We've heard some reports saying that they're trying to reduce the debt by diluting the stake, etc. So how exactly that's going to pan out is something that we will have to watch out for. I think on the numbers front, both Ambuja and Adani Port numbers have been good, and no major concerns on that front. But I think the biggest thing from a market standpoint, Nikunj, as far as Adani Saga is concerned, that if there is no major negative development and the kind of exposure that they have to the banks, there is going to be a major relief for the banking sector. If you remember, the banking sector and the stocks actually came down quite sharply when this entire controversy came into the limelight. So I think now that there is some sort of a stability in the stock price, at least the banking sector is the biggest beneficiary of that.
Let's shift gears then. And Hemang, thanks so much for joining in and sharing with us your outlook on the fundamentals. And all eyes are going to be on the RBI Governor Shaktikanta Das as he unveils the outcome of the crucial monetary policy review, the last one for the fiscal year. What's the buzz when it comes to the dealing rooms regarding this? Let's take it across to Somit, who has the lowdown. Somit.
Well, in the dealing room, also all eyes would be on the RBI's MPC meet, because dealers are suggesting that this could be the final rate hike from the RBI, and Morgan Stanley notes suggesting that the rates could be hiked by around 25 basis points. And if it is a final rate hike, then it could well be an inflection point for many NBFCs. Now, according to Morgan Stanley, there are key triggers for the NBFCs are the strong capital, the liquidity that is strong in these companies, along with ALM, good credit cycle, and a strong Q3 numbers that all the NBFCs had reported. Now, according to Morgan Stanley, few stocks that one should watch out for on the large cap space is Bajaj Finance, and that is their top pick in the NBFC space. In mid cap, they are bullish on Manappuram, Mahindra and Mahindra Financials, and PNB Housing Finance. And when it comes to small cap, they are saying that SBI Cards and Shriram Finance could also be a beneficiary if it is the final rate hike that in this rising rate cycle, if RBI announces one. And Morgan Stanley's expectation is a 25 bips hike in repo rate.
Well, yes, and that remains the consensus expectation, right? 25 basis point hike. But I think the more important bit would be whether there's a change in stance and the commentary, whether it's a bit more dovish or continues to be hawkish coming in from the RBI governor. But for now, the market is suggesting it's going to open around that 17,750 mark for the Nifty. And if it does open at that level, our chartists are making a consensus view that you should hold on to the position. Kunal as well as Nuresh both have a hold call coming in for the Nifty, while Santosh Meena believes that there is a bit of upside available and he's willing to take a bet and buy even at the Nifty being around that 17,750 mark. For Bank Nifty, it's a similar story. Kunal and Nuresh believe that maybe we'll continue to be sideways and that's why they are maintaining a hold call. But Santosh believes there is some move which might happen post the RBI monetary policy meeting, and that's why he's suggesting a buy when it comes to the Bank Nifty as well. But let's talk about the stock-specific action that we are seeing, at least in the pre-market rates for now. We are getting rates coming in from Credit Access, which is showing an uptick of around 5%. Thermax reported a good set of numbers, and that's showing an uptick of around 4% in the pre-open rates. And Varroc Engineering too is showing a bit of a result reaction. Result reaction also coming in for Ambuja Cement, as well as we'll watch out for the entire cement pack today on account of the possibility, or at least the talks regarding reduction of the GST cut. On the losing side, it's Bharat Dynamics, which is down 4%. So after the weak results yesterday, it continues to be on the downtrend. And some of the PSU names, the likes of Coal India, Power Grid, are also on the back foot. Kunal, your take as far as the entire industrial space is concerned, Thermax, the smaller names, the likes of Varroc Engineering, etc. Is there any chart that would be a blanket buy at this point of time? Is it L&T again for you?
Yeah, I think it's L&T, it's Siemens. I think that has also popped up quite well. I think if I'm not wrong, yesterday Siemens at 3100 plus mark, 3120 to be precise, managed to come back towards a major high for itself, and it's also on the verge of a breakout of a triangular pattern on the swing chart. So that could be another stock which has done pretty well. The likes of Thermax, Varroc, So when you do a price comparison, these stocks are still trading below their 200 DMAs and the 50 DMAs by quite a big margin. In fact, these stocks are also trading much below their multi-month multi-month highs as well. So I think that's the only concern, that in this kind of a market, it's always better to try and bet on stocks which are already on breakout modes rather than betting on stocks which have been underperforming. I think that's the only concern with this kind of a momentum-less market. So I would go with L&T as well as Siemens in that regards.
There's Paytm in the pre-open session. Where's Zomato in the pre-open session? There's a tweet from Deepak Fertilizers, and it's a very interesting tweet where he is complimenting VSS, which is Vijay Shekhar Sharma, that you've turned profitable, but he joined late to the party as he's focusing on how they can turn around Zomato. If that tweet will bring it up for our viewers, but I think Paytm is locked up. Kunal, is that the maximum it can go?
No, I think 10%.
It can go 10%,
Yeah,
right? Maybe just stop there. There you go. I mean, what a lovely tweet. Congratulations, VSS, on Paytm becoming profitable. And sorry, a bit late to the party. Was so busy working on our own profitability. Guys, Zomato numbers are not out. Zomato numbers are on 9th. Is this a hint that what kind of numbers we are in for? They're the first company, in fact, I think last June or July, they were amongst the first to define the path to profitability. Said that there is something called a path to profitability for new tech and fintech, because the motto for them was to grow and grow at any cost, irrespective of the path to profitability. So that entire definition that some of these companies can ever imagine that they will be profitable in next 2 or 3 years, that really Zomato was the first one who started indicating on those lines. Zomato up at 51.5, up by about 4%. But we are in for a solid session. Even if not for a solid session for benchmark indices, there is a lot which has changed in terms of the market psychology. Adani group of stocks, let's look at it. First the fall and then the rise. Volatile, very volatile. But at least directionally, they're not having a domino effect or a collateral damage. The collateral damage which happened to lenders, the collateral damage which happened, let's say, on the budget day to the entire market, at least that is getting arrested. You've come on the right side of the budget. Adani stocks, the collateral damage in terms of the domino effect, that seems to be stemming. Fed on expected lines, inflation is nearing its peak, interest rate hike is nearing its peak. Reserve Bank of India has already done the groundwork in terms of what we should expect from the RBI governor today. So as you walk into trade this morning, you cannot look at the Nifty and say this market has nothing to offer. In fact, it has a lot to offer. And if some of these fintech and the new consumer tech stocks, they start making a comeback, then that really opens a new pocket of the market where the market attention would shift. You need a narrative which may just shift the attention of the market, from the Adani group of stocks to other group of stocks. So will the attention of the market now shift to some of these new groups, new consumer tech and fintech stocks? When the fag end of the earnings season, very few earnings are left. If you really ask me that, apart from banks, which is one sector where numbers have been strong, I think it's autos. Autos have done nothing in the last couple of years, whether it's Tata Motors or Maruti, with the exception of Mahindra and Mahindra. So I will not be surprised that auto, even though they've not shown a lot of elevation, that becomes an outperforming sector for next couple of quarters. 10 seconds to go. First rates on a day when Reserve Bank of India will come out with the credit policy. Expectations are not really very high. In fact, it's going to be in status quo in terms of what the commentary on inflation would be and what the stance on interest rate hike is. First rates, Wednesday morning. And what do we have? We have a 39-point uptick on the Bank Nifty. It's a flat start for the Bank Nifty. It's a flat start for the Nifty. It's a flat start for the mid-cap index. It's a flat start for benchmark indices. Zomato, 5% higher. 5% higher for Zomato. That tweet must have done the trick for for markets to assume that after Paytm, Zomato also could really talk about profitability. Yes Bank is charging up smartly. Adani Power in the green. Yes. Adani Power in the green. It's up by about 2% right now. I mean, the stock has been really on the receiving end. And then you got hello sir, Paytm, 10%, 9% higher for Paytm. Adani Wilmar is also in the green. You've got Adani Ports, which is up by another 4%. So it is a sea of green. So, you look at the index and you would say momentum nahi hai, direction nahi hai, Nifty is not going anywhere. But look at the surge. Zomato, Paytm, You got Adani Wilmar, Adani Ports, and then you got a big surge which is coming in Adani Power. For me, Adani Power and Adani Ports and Adani Wilmar are also important. Adani Port and Isha is the pivot stock. Adani Power and Adani Wilmar are the ones which have really been on the receiving end. And let's look at Adani Green. Has that one also managed to come out? Adani Green, yeah, there you go. That one has also come out of the of the lows.
Sure. So Adani Group of stocks doing the this morning holding up in the green, but what's also holding up in the green is Credit Access Grameen. That's up around 8%. A result reaction coming in there. Zomato is something that we flagged off already, a 6% move. Ambuja Cement is higher by around 2%. So entire Adani Group of stocks doing their bit, and other cement names like India Cement, etc., are also in focus. Coforge, wherein there was an initiation from Nomura this morning, is also quite excited. So we are watching out for that. On the losing end, it's Bharat Dynamics, which is down 5%. Concor, wherein there has been a downgrade coming in from Nomura, is again down about 3%. And some other PSU names, the likes of Power Grid, Coal India, are at the receiving end. In terms of other result reactions, wanted to flag out what's happening with Hero MotoCorp. Pretty much flat, I believe, because while there was a commentary which was strong, there was a tad bit of miss when it comes to the margins. Bharti Airtel too reported an inline set of numbers. The street was quite surprised with the capex that they have done of almost 9,000 crore in the quarter, and that's perhaps the reason it's down about 1.6%. Wanted to check up what's happening with respect to Deepak Nitrite as well. The earnings were weak, plus there is a report of a fire at one of the units, so that's keeping that stock in the red, Avan.
Yes, absolutely. Loads of other names. Then we're tracking numbers that will come out today from Madison Sumi, Escorts, Cummins, Piramal Pharma, Piramal Enterprises, Burger King. So all of those are going to be in the spotlight in today's trade. Meantime, you've got L&T reports indicating that AM Nayak is going to step down in October, plus the management talking about how their margins are going to recover next year. Cement stocks as well, with those reports saying that GST cut on cement may be put on the fitment panel stable. That's keeping that entire cluster of stocks, I think, abuzz across the board. GAIL, by the way, is in focus. Henry Hub, which is actually the benchmark US gas price, is at a 25-month low, and it's important because nearly 50% of the imported LNG volumes are from the US. Maruti Suzuki as well, Suzuki Motor, saying that India is a strong market in sales as the sales in Europe and Asia have fallen. Deepak Nitrite as well, just a quick check-in. Remember, there was an incident of a fire that took place in Vadodara on Tuesday early morning. So that too is going to be in the spotlight, and then a whole host of other result reactions. NHPC, Bayer Crop, Sobha, Phoenix Mills. You flagged off a number of them, but BSC, Somani Ceramics, Wonderla Holidays, etc., all in the spotlight. Time to get in those first trades. Let's find out, Kunal, what it is that you're flagging off this morning.
So one of the larger cap names which I've been bullish on over the last 4 days, Bajaj Finance, from 5,800 to now 6,250. It's closer to the targets which I had eyed earlier, so would look to book out profits over here for Bajaj Finance.
Okay, booking profits for Bajaj Finance, but what about you, Nuresh?
So that's a buy on NCC. The stock is waiting for a breakout over 96, so preempting it would add more above 96 during the day.
Atul Suri joins us. Let's connect with him and let's understand that why he has not joined us in the studio. Your life, I want to know. We kept the studio ready for you. I'd order a cup of coffee also.
Just that the night got a little longer.
That's why I ordered a coffee for you, my friend. I know where you were.
Don't worry, I've got mine. Thanks a lot. Really appreciate it.
You missed the second part.
Sorry?
You missed the second part. I know what you did last night.
You don't want to know.
What's the right way of looking at this market? If I look at the market from the prism of Nifty, it's dull, boring, lacks momentum. If I look at the market from the prism of Adani Group of stocks, scary. If I look at the market from the prism of banking stocks, there is no problem.
Yeah, so Nikunj, we last spoke just before the budget. So I think the Nifty was 18.2 and, things were good. It was seeming that we were just 3 to 4% from lifetime highs. Then just prior, I think 24th, 25th, this whole Adani Saga happened. And the Nifty moved from 18.2 to something like 17,350. So it fell about 5%. But what the behavior of the market actually gives me a lot more confidence. See, you had the largest industrial group and, stocks fell 50, 70%. However, the damage, and mind you, Adani Enterprises is a part of the Nifty. The damage on the market was just 5%. there would have been a lot more damage and a lot more collateral damage that could have happened. And markets have recovered. Today, what are we from 18,200, which I think is an important level, because if we surpass that, then we'd say that we have put this chapter behind us. We are about 3% from there. So I feel that it is showing immense maturity and immense depth. And remember that in this phase, if you look at the FI selling, it has been massive. They have been really selling for the last whatever week or 10 days. And in spite of all that, you realize that what is the damage? And this damage also is being limited to a few stocks which belong to the family or the group. Beyond that, banking was one place which there could be collateral damage, but you'll find that even the bank nifty is about what, 3-4% from there. So I think that the good part is that this thing hasn't spread, it has been localized, and this particular group or sector is actually now accumulating very well. So beyond the point, when the moment we have another headline, this would be forgotten. So all in all, I feel very, very positive about the market, continue to do so. And this incident, as I said, these are things nobody can predict, but the reaction of the market is what is encouraging. What happened, what are the future, what are the, nobody knows, nobody has an answer to that. But the important part is that if there is news which the market is not prepared for, what is the reaction of the market? And I think the reaction of the market has been very good. Lot of sectors, lot of stocks still continue to make 52-week high, lifetime highs, while this whole thing is playing out. So the market breadth still remains good. The damage I don't think is much, and I feel that we will recover, and this will actually show resilience and the solidity of the bull market.
I just want to make this point for our viewers. Just imagine a situation where 5 years ago, if any would have told you the poster boy of the market, if that group had taken 50% knock, what will happen to the market? Everyone would have said markets would have also gone down by 30-40%. But the pivot group for this bull market has been Adani group of stocks. They are down 50% and the market is still holding on. That I think is the point which Atul is also trying to amplify, that the market is just not dependent on a group or a particular stock or a particular group of names. But Atul, markets are markets. When you see a fall as vicious as what we've seen in Adani group of stocks, what is the realistic way of looking at it? Because you understand trends and momentum and then you can connect it for us.
So for me, fortunately, we didn't have any exposure to Adani stocks, but banks and the few banks who've led to it, because that is where the whole, the chips would have fallen. And you realize that the good part is that they came out with very good numbers during that phase. But beyond that, you'll find that the recovery has been good. This thing has not become contagion. It has not spread. And then in this phase, the opportunity is that you have to see what stocks and sectors are doing well, even when this is happening. Like, there were still some banks that did very well. You will find that some FMCG stocks continue to make new highs. Electrical equipments, capital goods I've been talking about, they continue to make highs. So even in the face of adversity, when there are stocks and sectors that continue to move up, and as I said, the sector where the contagion could be highest, which would be banking, has also held on very well. So this really gives me to understand that where the strength is in the market. First and foremost, we spoke about, I feel that the market has shown great strength and great character. And second is that even in that phase, there have been stocks and sectors that have made new highs. So in the face of said adversity, what you rightly said, Nikunj, that if this had happened 5-10 years ago, when we didn't have these kind of domestic flows, the question was that, boss, will the market go in circuit? It was not just a stock. In those times things were different, and we know how it has happened. It happens at 9:16, and there's so much panic. There are no buyers on the other side. But now there is no such panic really. And in the face of panic, in fact, sectors and stocks are making new highs. And that ultimately are what is giving you a sign of where leadership is. And I think that's very, very positive.
Even that we spoke to you last, that was before the budget, before the Adani group of stocks route. Your Nifty target was 21500. Any reason for us to believe that you would like to revisit it today?
No, not really. See, and these are not, in fact, these make it much stronger. This makes the conviction stronger because, nothing moves linear in our market. Everything is zigzag, and every philosophy, every thought process, every theory gets tested. And of course, the theory gets tested. When the stocks are down circuit, you ask yourself, oh God, is it going to like spread? Is it going to topple the market? But the way the market has performed, the reaction that there is, and the breadth there is, in fact, makes me positive. And the biggest cause of positivism, which I shared the last time with you also, is the way global markets are performing. It's not just India. The kind of move that you are seeing in global markets is phenomenal. The breadth you're kind of seeing that is happening, the way European markets are performing. So this gives me a sense that this bull market is a global bull market in equities, and India, though in the short run may have underperformed, but I feel that when this kind of plays out, we will still be the best performing market or among the best performing markets. It's just that we have run up very fast. We broke out early. It's like a race. You break out early, you run early. You need to pause. You need to take some rest. In that, you also get tested with this whole Adani saga, and still you find that you're not tripping. You come back, and I feel that India will pull up in the short term. A lot of global markets were oversold. In fact, the most oversold spaces like China, etc., which people are talking about, they have been dogs of markets for the last 3 years, 5 years, 1 years. It's just that in the last 3 to 6 months, but that does not take away the belief or conviction in India.
Oh, well, yes, the investing in market is definitely not a sprint but a marathon, and that's what's happening with the Indian markets as well. But Atul, before the budget, when we spoke, you were quite bullish about the entire industrials and manufacturing theme. Post the budget, have there been any new pockets or areas that have emerged with respect to the fresh investments?
No, I think that a lot of these stocks, even in the phase post budget and this correction, have actually gone on and made new lifetime highs. And the numbers that have been coming out of them are spectacular. So you are really seeing that, as I said, that tough times don't last, but tough people do. And this was a case in point of some great companies, which I feel that where the trend is. I still reiterate, I feel electrical equipments, cap goods, etc., in the industry facing sectors look very good to me, and they have really held out very well in this fall. So I think it makes me a little more confident.
Just to take that point further, then those industry-facing, stocks and sectors that you're completely bullish on, what's the view on the entire capital goods space? Would it extend to, say, defense-related stocks, railway, or even those closer to real estate and infrastructure?
See, defense has been doing very well. In fact, if you see the last 1 year, barring PSU banks, we don't have a sectorial indices, but we've done some work. The sector that did the best was defense. In fact, defense stocks are going through a bit of a correction. But I think that, again, it's a longer term theme that is going to play out. And I do think that, post a correction, you are going to see accumulation happening and they'll take off. I mean, not just that, you look at something like tire stocks, they are also doing very, very well. So there are a lot of pockets, hotel stocks, hospitality. So the breadth, it's not just linked to banking, or it's just not linked to, one IT. The breadth, you look at banks, barring last week, they've done very well. Defense stocks have been doing well. Tire stocks have been doing well. Hotel stocks have been doing well. Selectively, FMCG stocks have done well. Fertilizers have done well. Cap goods have done well. So the breadth or the sectors, it's not that the market is being driven by any one sector. In fact, that always becomes a pain point, and that is what is good. This is also what you're seeing in the US. If you look at US markets, you'll find that the breadth is very good. The mid caps, small caps. So the breadth is we look at the tech spaces because obviously they are bubbly and they move up and down, so they become headline news. But a lot of these boring industrial plays also are doing very, very well, and they are, remember, participating in a up move after almost a decade of underperformance.
Atul, when typically you see a shakeout like what we've seen because of Adani group of stocks, it changes the market template, which is suddenly IT is outperforming. Suddenly you got outperformance in a stock like ITC and Britannia. So my limited point here, Atul, is that when you see a shakeout in a poster, in a pivot stock or in poster boy group of stocks, the market tends to revert. It changes the leadership. Do you see that happening?
No, I don't think so. If it had to happen, Nikunj, it would have happened. It would all happened in the last week or so. Now, in fact, the thing is that these stocks hopefully will move away from headlines. Yes, they will do their bit. They will move up and down. But beyond the point, I think they will settle at a level and they will move away from headlines. And then you and me will have other things to talk about. Like today, you're talking about Paytm and Zomato. So the headlines change and news change. And when there are new news or fresh news, the old news actually takes time to settle. So this is something where, of course, they've had pain. They will need time to repair. And I think with time, they will repair. So rather than, focus on them, what is the bottom, we were never in them. So fortunately, but the fact is that it will take time. There will be need for repair. But the beauty is that the headlines would move to other spaces. And, you are a representative of that. What you talk about or what you look at market opening as actually decides headlines. So from that point of view, even your narrative, I realize, has changed this morning. And I think in the days or weeks to come, this will totally change. And that should be a good repair process here. it's good if it doesn't remain in headlines for too long.
Atul, at the beginning of the year, the underperforming trade was IT. Guess what? That has turned out to be the outperforming trade of this year. The outperforming trade of 2022 was PSU banks, and that has underperformed. If you believe that the leadership in the market will not change, can I safely say that Atul Suri is of the view that IT, in a sense, has peaked out after the dead cat bounce, and PSU banks are getting ready to come back on track and regain momentum?
No, I wouldn't put it in that way, Nikunj. No, I don't think so. I think even IT will have, if you look at some of the mid-cap IT stocks, they're doing so well. Some, I don't want to take names, but they're all, all breaking out. So that really tells me that there's a massive accumulation happening in IT. In fact, I feel that a lot of smart money is accumulating IT. And, that could, in fact, be the next sectorial or thematic move. There is a possibility if your digital plays do some good numbers, or, they handle their financials well, this could be a trade. So I don't think that IT is done and dusted with. I think that selectively, I think there's a lot of smart money that's moving into IT. PSU banks did well. They may require some time. They have run up very fast. So I think that the cyclical nature of the market. But the point to take away is that the breadth, whether it is stocks or whether it is sectors, where when the market is just, let's assume only banks move, and banks, because of their weightage of the Nifty, can absolutely drive the Nifty, but where everything else doesn't do much. That is a dangerous scenario, because when that bubble pops, the whole market collapses. Now the beauty is that there is a lot of breadth, a lot of sectors. I just read out a few of them to you. So the beauty is that there are a lot of sectors that are participating, and this makes the market more solid. And this is what was demonstrated last week, that yes, the poster boy uh, theme, or you may say group, which was leading the market, popped. Yes. But what happened to the market? Nothing. There was no major damage really. That is because there's breadth. If the market was only being led by this industrial group, this group, or this family, then there would have been a big problem in the market. So the breadth, the sectorial breadth, is very, very encouraging. And very often this takes time. This is the kind of base building process, and this actually leads to very, very good rallies later.
I I know that you don't have exposure to the new age tech companies, but I'm still tempted to ask you your view when it comes to all of these names. What will make you and convince you to probably take an exposure in Nykaa, Zomato, Paytms of the world?
See, I'm a trend follower, so I don't really try to predict the bottom. For me, what is very important is that these companies will have to first and foremost demonstrate profitability. And I know that I will not get the bottom, it may be too late. But very often catching the bottom can be very, very dangerous, catching falling knives. It just is very, very painful. I'd rather be a little late, I'd rather be a follower than a predictor. So first and foremost is I need to see certain amount of profitability in these companies, and a couple of quarters. And post that also, you will see in the price that they're making massive basic formations. They're very, very far from their 52-week lifetime highs. And then you will start seeing breakouts. So I would wait for these to be tested per se to be a part of a portfolio, because it's great for traders per se. But for an investor, you need to see, because once they do that, then you realize that these companies can have a very long runway. So I'd rather wait for that to happen. I'd rather wait for more consistent profitability to come in, and also to price to show the bottoming formations.
Group of stocks, and today there are two stocks which are almost off the circuit. One of them is actually Adani Green. Adani Green has seen a straight line fall. Let's look at Adani Green from 20th of Jan, I beg your pardon. It's been a straight line fall for Adani Green from the lower circuit to the upper circuit. I think that's where that's the kind of reversal what we've seen in Adani Green. That's today's intraday graph. We'll measure the straight line fall for you. Yes, sir. It was the 3000, came down to 850. So it's been a more than 50% fall in Adani Green, but that stock is off circuit. Adani Port is up 8%. This is one stock where institutional coverage is there. Adani Enterprise still way below its offer price of 3200, nowhere close to its all-time high. But these are some of the stocks which in a sense are really, really reversing. Atul, for market to, or for Nifty to move to 21,500, it needs leadership. Reliance is rusty. HDFC Bank has been rusty. ICICI Bank is off from its recent high. So where will the leadership for the Nifty come from?
I think, Nikunj, this time what I feel is that the it's not going to be a single sector or theme, as I've been talking, that there is a breadth in the market. So the fact is that there are a lot of sectors like cap goods, and I've been harping about it. I'm sorry to again repeat it, but I feel that that could be a sector that could really do well. So everything may do a little bit. Maybe the big so-called marquee names may not. Of course, they have a weight on the index, but you may have a broadening or breadth of the market. You may have a lot of mid caps that will do well. So slowly, slowly they will push up, and I think that is a much, much more sustainable and healthier rally. Um, and I've been making this point throughout this interview that the breadth is very, very impressive. Moving away from a few poster boys is always very good, because if a few poster boys are moving the market, there's always a big risk if they pop. So that really is my thing, that it's not going to be just these 3, 4 marquee names. It is the market as a whole, sectors as a whole, which is really going to do well.
Also closely track the charts for what's happening, let's say, in the US markets as well as other dollar index, etc. Just wanted to get a perspective from the FII angle. Do you see that there could be a bigger rally in, let's say, the US stock indices, or let's say China and the other South Asian names?
See, one must remember that these markets are seeing what you called as an oversold bounce. Like China, people love to talk about it. It is just a lot of humbug talk. 6 months ago, nobody wanted to touch China. China was cheaper than it is today, right? Everyone had issues about a government which has haphazard COVID policies. You had businessmen being suddenly vanishing and things like that. There were corporate governance, all those things. And suddenly China seems to be the flavor. The world only chases momentum. The world chases price just because everyone wants returns. So the narrative changes very fast. India, which was a darling, suddenly has become expensive. And this thing can also change at a dime. So I think that, this whole China thing is good. You have to go and look at China 3 years, 5 years, and then see what India versus China stands out to be. It's just 3 months that people are getting, oh, so that India is a dump and China is the place to pick up. I think that's a very, very small way of looking, or splicing data in a very narrow segment. I think India is still the secular big bull market. In the US, a lot of repair happening. I think the S&P 500, etc., have all reversed their trends, and they've done very well in the last 3 to 4 months. In now, they may also take rest, because if you look at the last 2 days or so, you'll find that US bond yields have again started creeping above 3.5. You'll find that the US dollars also got stronger. So I think that global markets may pause a little bit, and India, I personally think, will continue to do its repair and move ahead. So this is just a short-term thing. It was like about the war. India is too expensive, and just dump India and go into China. These are just trading opportunities, and there are a lot of hedge fund guys which will do it. But if you look at the charts 1 year, 3 years down the line, you realize that, boss, we are a very, very far superior animal as far as the equity markets go.
All right, Tulsuri, appreciate your time. And I
Thank
certainly
you.
hope to
Thanks for having
see in the studio next time, and we're going to enjoy a cup of coffee. It's going to be cheers this time from me doing a cheers from studio, you from your office, but next time, let's do it in the office,
Sure.
or in our studio.
Cool. Yeah. Thanks, man.
Amitabh Bhargav, CFO with Deepak Fertilizers, joins us now. Good morning, Amitabh. Thank you for joining us. There is a significant decline in volumes for the quarter gone by. How is the outlook going forward, considering that the peak demand from mining and infra segment is there in Q4?
Well, in TAN, there was a little bit of a slowdown, or I would say a delay in demand pickup from infra and non-coal segment, and that is what you see in Q3. But Q4 is always, as you would see, it's traditionally the peak quarter for both TAN and asset segment, and therefore we expect that in Q4 the demand would pick up. As far as IPA is concerned, we've been saying that IPA is a little bit of under pressure from Chinese import, and to that extent, a combination of, I would say, margin pressure as well as some challenges we saw in the raw material in terms of the RGP, or refinery grade propylene, that we use. Those were the two reasons why our capacity utilization or sales in Q3 were down. We expect IPA pressure to continue, but TAN would pick up from here.
Once the ammonia plant expansion, Amitabh, commissions in Q1 of FY24, that is next quarter, what will be the increase in your capacity, and what kind of revenue you think it'll add because of the ammonia business coming on?
Yeah, as far as revenue is concerned, given that all of the ammonia would be used for our own internal consumption, At consolidated level, it will not result in any increase in revenues. But yes, on a standalone basis, ammonia, given the current prices, the top line could be around 3,000 crores. As far as the bottom line is concerned, at EBITDA level, the current prices of gas and ammonia suggest that our margins should be on a full year basis should be somewhere in that $300 to $350 per ton of ammonia, and that's nearly for a 500,000 ton capacity is somewhere in that 1,000 to 1,200 crore region as far as EBITDA is concerned.
Now, with the winter getting over and gas prices also softening continuously, it's back to pre-war averages in Europe and in China, which is leading to supply fulfillment and a decline in ammonia prices. What is your industry view on the same?
Well, as much as there is going to be additional production in Europe because of gas prices coming down, we are also likely to see demand pick up from China because China has opened up. In previous 2 quarters, China was in fact a net exporter of ammonia, so that supply would go down. Over the years, we haven't seen much investment in ammonia capacities, particularly the capacities which are non-integrated, which bring the trade ammonia into the market. And that fundamental, we believe, will continue till the new investment come. And to that extent, ammonia prices, of course, have weakened from we saw $1,100, $1,200 of FOB Middle East to now $800 to $850 odd dollars. But ammonia is likely to remain firm given the supply side hasn't, not much investments have happened in past few years.
Yes, morning, Mr. Bhargav. You have also commercialized the solar-grade nitric acid and are about to launch the steel-grade nitric acid. How confident are you of this segment in the wake of very hefty competition?
Well, at this stage, we haven't seen other nitric acid players trying to develop any new products. While we have constantly worked on new products, more and more differentiation and specialization in our chemical segment. So as far as competition is concerned, at least in these 2 segments, we don't see much competition.
So what kind of incremental pricing margins do these specialized products bring you compared to the general nitric acid?
Certainly, there would be incremental margins because this is more, I would say, value-based pricing, the kind of additional value that we provide to our customers. Given that we are in early stages, it's right now, it will not be fair to put a number to it, but gradually as the volumes pick up, we would certainly report those numbers.
All right, we'll let you go on that note. Thanks so much for taking time out and giving us a view on the outlook for Deepak Fertilizers. On that note, it's time to take a very quick break. Stay with us as we focus in on more corporates and the markets when we return. All right, let's get a move on then, and just want to check in on some of the stocks that are holding out because it's a pretty quiet market. It's when it comes to the broader universe. The frontliners, though, are holding out today in the session. So within the broader markets, then you have the likes of an Adani Enterprises that's stealing the show, Adani Port, third straight day on the trot, KEC International, Thermax, a result reaction, Coforge, something like a Serra Sanitary, and then the entire cement cluster They're all abuzz in today's trading session. So Ambuja, ACC, Ultratech, India Cements, etc. That entire basket of stocks is abuzz in trade. Let's move right on then and focus in on Keystone Realtors, decode their pre-sales trends as well as the outlook on the sales potential when it comes to new launches. Boman Rustam Irani is the Chairman Managing Director joining in on the show. Good to have you on board, Boman. Thanks so much for joining in. Now, your pre-sales momentum in the mid and the mass as well as in the affordable segment has been robust, contrary to the premium segment. Now, last year, your premium segment did quite well, but you witnessed a dip on a year-to-date basis. Just want to understand what has caused this trend divergence.
Good morning and thank you very much. Look, we have the wide bouquet of projects all across from affordable, which is less than 1 crore rupee apartments, going all the way up to premium and super premium, which range from 7 crores to 15 crores and beyond that as well. Last year, we had a one-off sales, which was in the premium segment, and that's why in that quarter you saw a huge blip. Given the fact that pre-sales this year or this quarter have been close to around 1,131 crores for the year to date, and collections for the year to date are roughly around 1,163 crores, which is roughly around 19 and 27% higher than year on year last year, if I remove the one-off sales that had taken place last year.
So what is the right way of looking at your numbers? Since you're a new company, markets will look forward for some kind of a definition as to how should one look at your numbers, because nobody looks at real estate numbers on a sequential basis. But in general, what should we expect?
So basically, pre-sales and collections are a good number to look at. New launches or pipelines and operational cash flows are a great number to look at. I can mention to you that the surplus for the quarter in terms of operational cash flows to date have been about 110 crores and 280 crores for the year to date respectively. These might be great indicators to look at. Another indicator to look at would be the healthy pipeline, the robust pipeline of new projects that we have kind of launched. In the 9 months of the last year, we have done 0.5 million square feet with a gross development value of roughly around 545 crores. This year, in this quarter, we've tied up close to around 0.6 million square feet, which will get launched, and the gross development value of those will be in excess of 1,000 crores. Financial year 23-24, 2.5 million square feet with a gross development value of close to around 6,400 crores is what we see. And total, till March 24, we see about 3.1 million square feet getting launched with a gross development value of about 7,400 crores.
So what you're telling
these would be great indicators.
Yeah, so what you're telling me is that FY24 is going to be the best year in your history. If I add up the kind of projects what you're launching, it may perhaps be one of the best year for you?
So the way I look at it is we constantly replenish, or we have a robust pipeline of new project launches. These new project launches are in line with our investment philosophy. As I had mentioned earlier, our investment philosophy is not to invest more than 10% of the gross realizations of the project before we are ready to go to market. This keeps us asset light. It keeps us, very low on investments in new projects. And the general returns on these projects in terms of EBITDA would be in the region of about 25 to 27, 28%. And your PATs would be in the region of about 17 to 19%. So yes, we, given the regulatory framework and the fact that we are constantly able to keep churning out newer proposals or bringing new proposals to fore, we should be having a great year going ahead.
There are two things which we need to discuss purely based on budget. A, what's happened to the luxury housing, and B, what's happening to the affordable housing. Which one should we start with?
You choose. I can tell you about both if you want. I can start off right away. What we saw in the budget was that homes that, or rather your capital gains was capped at 10 crore rupees if you went and purchased a new home. Again, over here, Rustamji is well placed. Keystone Realtors is well placed because we've got projects in what we call the aspiration, which is in the 3 to 7 crore rupee range, and premium, which is 7 to 15 crore rupee range. And we have a good pipeline of these projects as well. So those capital gains, those who are trying to gain advantage of capital gains would fit perfectly well in these segments. Immediately on the finance minister making the announcement of the budget, I quickly checked with our teams as to what were the sales that we had thanks to the capital gains advantage last year. And I can tell you of the 20 plus apartments that we've sold in the super high value, and we're launching plenty more this year. we did not see more than one that was for capital gains purposes. So look at it this way, that there is a natural demand for good homes. People have the ability to go out there and use their capital to get a good home. And those are the kind of buyers, discerning buyers that come to us for their homes. On the affordable side, I think the government has done a fabulous amount of push. I wish they would define affordable housing only on the basis of area and not on the basis of a cost that is 45 lakhs. The whole point is that by kind of making it a little difficult to fit into 45 lakhs, we are keeping Mumbai MMR markets out. Having said that, we've got two projects in this price range. One is in the Virar and the other one that is soon coming in Dombivli. Both of them will be able to serve the affordable housing market, and that's a steady state market. You just have to create a great product and give continuous pipeline for supply, and it turns out quite well.
Yeah, and you also had the PM Awas Yojana outlay, increasing it by over 66% to about 79,000 crore rupees this time around. So just wondering, I know you touched upon affordable housing, but would you be looking at catering more towards this space down the line?
So as I mentioned, PMAY is a little, well, it's still got to come into its maturity. I'm not the right developer for PMAY developments. We do affordable housing in the 30 to 50 lakh rupee brackets. But no, we don't do PMAY at all. No.
And let you go on that note. Thanks so much for taking time out and joining in and giving us a view as to how business is shaping up, your targets as well as outlook down the line. All right, let's get a move on then and focus in on the MPC meet outcome, because the street this time around is penciling in that the committee will raise rates for the very last time in this cycle and then take a long pause. My colleague Ankur Mishra, who's outside the Reserve Bank headquarters, joins in with a heads up as to what we can expect. Ankur.
Reserve Bank of India Governor Shaktikanta Das will detail monetary policy, and all eyes will be there whether or not there is going to be a rate hike. Some of the economists have predicted this time there may be a pause by Reserve Bank of India because the central bank may want to see the impact of the rate hikes which has been taken so far. Plus, inflation has also remained within the range which has been predicted by Reserve Bank of India. The maximum prediction which has come for repo rate hike is of 25 basis points, but most of the economists suggest that we may be near the terminal rate, or the maximum it could be 6.5%. Now, another thing to watch out for will be the inflation forecast, whether or not Reserve Bank of India would like to curtail the inflation forecast. Given 2 months in a row, inflation has remained within the 6% band, but still core inflation remains sticky, on which Reserve Bank of India Governor Shaktikanta Das has publicly opined his apprehensions. Apart from that, growth forecast is another thing to watch out for, and liquidity management after in the budget government has announced a borrowing program.
Okay, Ankur, thank you so much for that. Let's discuss that more with Maithili as well. She joins in to tide us through what is going to come over the course of next 30 to 40 minutes from the RBI Governor. Maithili, hi. Good morning. Thank you so much for making time and speaking with us. First up, 25 basis point hike is largely expected. It's also expected that this is going to be last in the cycle. But what are you expecting with respect to the change in stance coming in?
Well, I think the change in stance is perhaps a little easier to tackle at this juncture. You could move to a neutral with a fair amount of justification. As far as the rate hike is concerned, I think this is one of the rare cases, frankly, when one could argue like a good economist on the one hand, but on the other, because you could argue for both for a 25 basis points hike, and you could also argue for a pause, because after a long time, the data is quite ambiguous. Unlike over the past few months when inflation was high and it was very clear that there was only one way the interest rates could go, which is upwards, this time around we're not very sure, because inflation is slowing, but we've only got 2 months data. We also know that this is driven mostly by food inflation, which always comes down in the winter months. We have no fix on how oil prices are going to move, and we really do not know whether government's debt program will remain where it is, which is not very much more than last time, especially since growth is slowing. So this is one instance after a long time when the signals are quite ambiguous. So you could argue for both a 25 basis hike as well as a pause. Ultimately, central banking is more an art than a science, so it will be a judgment call. But my sense perhaps is that the RBI will go in for a 25 basis hike.
25 basis point hike, that's what's likely to be the case. But are you expecting anything material to come with respect to something that can change the cost for rupee? Because over the last couple of trading sessions, we have seen a big move there. And there is this growing worry with respect to economists, being worried about the capital flows into the country. Could there be anything to spur that?
Well, I don't think the Reserve Bank would send any signal at the moment, frankly, because a lot of, or regards the capital flow, a lot depends on what happens in the US. And as we've seen, the Fed has slowed down the pace of rate increases. The US economy still seems very strong. So depending on how the dollar moves, the rupee movement will be a function largely of that. At the moment, we do have comfortable forex reserves, but our current account deficit is not in a comfortable area at all. But the government in the budget has introduced some tweaks which will perhaps restrict outflow or discourage outflow from India. So they have hiked the kind of tax that you pay on remittances, etc. So I think at the moment, perhaps the Reserve Bank will not send out such a signal simply because it does not want to kind of cause any alarm. Immediate in the past few days, I think it is largely a result of the unfortunate things that we saw, in the stock market relating to a large corporate, and there was some jittery, say, feelings in the stock market. So I think this was more a reaction to that. Long term, I do not see any dramatic change happening, independent of what happens to the US dollar. So as of now, we'll have to wait and see what happens to the US dollar.
Yes, and then 20 seconds left for the RBI governor to speak. The expectation is it is going to be a 25 basis point hike. There would be a probable change of stance as well to neutral because things are looking a lot better. And overnight, we got the commentary coming in from US Fed as well, talking about how disinflation is something that we've already entered into. It is going to be a long and slow ride, and it's going to be bumpy as well, not a very smooth sailing. But nonetheless, they are expecting that inflation might come down to 2% in US in the coming year, which is FY24 itself. But for now, as far as the RBI rate decision is concerned, it stands at 100% consensus coming in that there is going to be a rate hike. This is going to be the last rate hike in the cycle. That's the word that we heard yesterday as well from Pranjal Bhandari. And the stance is likely to change from withdrawal of accommodation to neutral as well. Whether there is any commentary with respect to what's happening to the Adani Saga, anything regarding the health of the financial sector will also be important. You can see the governor getting ready. Let's cut across to the statement.